Good morning and welcome to today's episode of True Potential's Morning Markets. In today's video, we would like to review the Chinese national budget announcement. Last night, China announced its national budget announcement, which looks to set economic targets and goals for the region over the forthcoming year. So this has been broken into three different parts that we want to cover in this video. The first is economic growth, the second is inflation, and the third is its fiscal targets. So starting with GDP growth first, the government has set a real GDP growth target of 5% for the region. Now, markets think that this is a bit of an ambitious target, given some of the headwinds that are facing the economy, that being high amounts of debt, aging demographics, and also the deflation regime that is currently within China. And we also know that issues with the real estate sector continue to persist within the region. So markets believe that this 5% target is somewhat ambitious. If we look at consensus economic growth projections for the region, they are currently at about 4.6%. So what markets believe is needed to reach that 5% goal is fiscal stimulus coming from the government. The centre target, that being inflation, is set at 3%. And once again, markets believe that this is somewhat of an ambitious goal, given that the region is within that deflation regime, which is where the rate of inflation is actually negative. So once again, markets are looking towards fiscal stimulus being used to change that price inflation from negative back into positive. And the final part of that is the fiscal deficit. The government has announced that it doesn't want to go above a 3% fiscal deficit relative to its GDP. And what that would suggest to market participants is that we're unlikely to see any change within the fiscal dynamics within China. So the government unlikely to deploy further fiscal stimulus, looking to support growth and that inflation target. So how have markets actually digested this news? Well, looking at equities to begin with, they've actually fallen. So equity investors have been somewhat disappointed by this announcement and the news. Equities fell by 2.6% overnight. And looking at government bonds, so Chinese sovereign bonds, yields on those instruments actually fell and continued to fall. So they fell by 3 basis points, which takes them to an all-time low within Chinese government bond yields. So continuing to see that negative sentiment on GDP growth and also inflation within the region coming through bond markets. Thank you very much for watching today's video, and we'll catch you on tomorrow's episode.